Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. Today we are having a look at key European energy markets for the week starting 6th of May 2024. So you are watching this video on a Tuesday on the 7th of May because Monday the 6th is a public holiday in the UK. So we are starting, before we start actually with the markets, here just a little announcement. So all seats have been fully taken up for the Clever Markets Technical Analysis Academy in May. Applications had to be closed, I think like 2.5, nearly 3 weeks early, simply because all seats are were taken up so quickly. So in order to avoid disappointment, if you're interested in the academy starting in October, then let me know now. Okay, you can reach me via DM, or you can send me an email or WhatsApp. I'm sure a lot of you find some way to contact me, at least via LinkedIn. Okay, cool. So let's have a look at the TTF first. Starting as always with the weekly chart, and I just want to zoom out and remind everyone where we actually are. So we can see that we have been in this really long downtrend that's been going on for 2 years now. No, August 2022. So we have been pushing lower. Then we did find some sort of support in the low 22s. And since then we have been moving, I want to say almost sideways, because we are not making new lows yet. And we are definitely not making new highs. So zooming in, I like to put on the FIB retracements that simply help us with determining how high we are currently going. And anything below the 23.6% FIB is considered noise, which is where we are right now. We have a shallow correction going on if we are going to the 38.2, and then the 50 and 61.8% FIBs are like the deeper corrections. Now here's the thing, a couple of weeks ago, we did push higher once. We closed above 23.6 a second time, but then lower and lower again below it. So does the level count as broken or not, or what's going on here? So I think from an analytical perspective, it has broken objectively, yeah. But from a practical perspective, if we actually switch on our brains for just a second, in practice, probably it's still kind of holding. So I would say the second move above it was a doji candle, which usually means hesitation. So I didn't go bullish back then. So we retained the bearish outlook. Why bearish? Because we are still not making higher highs and higher lows. And zooming into this bit here, we are seeing that we are overall still making marginally lower troughs. But of course, you can see this here as a thick support line. So here it's really like dealer's choice, yeah, however you want to see it. But what remains a fact is that the market is not pushing above 30.29 for now. So I think it was like a pretty tricky situation on how to define it. But I think it's very easy to get just caught up in terms and definitions and market structure, defining the market structure. What remains a fact is the market isn't really pushing above this. However, you can see my first resistance level is up here, the 38.2 at 35.22. Why is that? Because I like to see this here as the real kind of high for now. So if you land anywhere between 30 and 35, which is a ginormous, it's a crazy range, right? But anywhere here, this is where we would find resistance. Now the question is, which one should you choose? Well, it simply depends on what you're trying to do. And the next question is, does it really have an impact on your trading decision? Because I think this whole question is a little bit of a red herring, because trading decisions are not made on the weekly chart. I mean, usually not. It's probably more 90% of my clients and the people watching it make the decisions on the daily chart. So I want to just say that be aware of the 30.29 and also be aware of the 35 on the daily chart, right? Which is exactly here. Yeah, we are in the 30s. And the 35 isn't even on here. It's somewhere up there, right? So this is the area that we actually want to look at. Okay, so the near term trend is bullish within the channel. So near term defines the next couple of 3 to 4 weeks approximately. And as we suggested last Thursday was that after such a strong gain that wasn't really supported by any sort of big fundamental shifts, we saw some moderation that was to be expected, good, so maybe a little bit lower, but we can see that overall the momentum is kind of stable. So yes, it has come off, but right now it's a little, it's stable. So the upside momentum is stable, and we can see that the stochastic is still pushing higher. So that's good. That means that overall the market is still pushing towards the higher end of its preceding trading range. And the volume is kind of solid, also on the green day here. So I would say maybe a little bit more moderation, a little bit lower, giving the market some room to breathe before we then try again to push higher again. But when would I be wrong? Well, I would be wrong with the whole idea of bullish continuation if we at some point start pushing below the trough here and also the trend channel support. So anything below 27.85, I want to see like two consecutive closes below it, or one really strong close. Then I would say the whole idea of correction, upside continuation is wrong, right? And that's what TA helps with. It tells me I don't need to predict the markets, because that's nearly impossible, but it tells us like candle by candle at what point our suggestion would be wrong. So how do we actually trade that? That's the next question, because there's a big difference between analyzing and trading, right? So here I want to say that we could push a little bit lower and then higher, but how low? Well, for that we start looking at the intraday chart. So here we see that we are working with this trend line. Previously, just a couple of days ago, last week, I had this trend line on here, and I said this is like really steep and it's very likely to be broken. So beyond this point, we wouldn't be thinking about upside continuation anymore, which was the preferred case. So it happened, so we removed the line again. And now very easily on Friday, we posted on the 15-minute chart these two candles here, small body, long upper wick, which usually could lead to a bullish reversal. But here's the thing, there is no confirmation from stochastic, which are still bearish. We can see that the MACD is still pushing lower, and we can see that the trend tools, the 8 and 12 exponential moving averages, are also still pushing lower. So that means that this 30 support level is more likely to be broken. And even if we bounce just a little bit, we could get something, I don't know, something like this here, for example. Whoop. We could get something like this, yeah? So that would still mean that we are pushing lower overall. What we don't want to see is a push above the most recent peak at 30.8, because then we would start a flow of higher highs and higher lows. And then honestly, I would say that we are possibly like pushing sideways a little bit. So what I want to see on Monday or Tuesday morning is a push below 30. That seems not completely unreasonable. And then we would make it all the way to the trend line support, depending on what angle we hit it, but in the low 29s. And here's the other opportunity, because you can see there's nothing else in the way, right? It goes all the way up until here. And here the market has to make another decision. And looking at how strongly, like even the bearish volume, yeah, how strongly the trend momentum tools are, it would suggest that we could break below the trend line and then make our way lower to at least 28.51, and then if not lower. But pointing out these support levels, even if they fail, is important, because at these levels we would be very sensitive to bullish reversal candles. I would start looking, I mean, I'm doing it anyway, but I would start looking more actively at any signs of bullish reversal on the stochastic. I would start seeing where the volume is. Is it on the green candles or on the red candles? Do we see any weakness on the MACD, right? So that's why these support levels, even if they're ultimately broken and they're not really a target, this is where the market could reverse. So that's why we need to keep an eye open. So let's have a look at where that lens is. The low 29s, high 28th, 8th, low 29, that would be somewhere, yeah, here, right? So it doesn't seem too crazy. Then the other one, let's keep them like this. I think it makes more sense. So was it 29.17, 29 point, yeah, somewhere here. So we could get another red candle until here. So that doesn't seem too crazy. And even if we push below that, the next hurdle is at 28.5, which puts us here, which is fairly close, not too far away, from the channel support already, depending at what angle we hit it, yeah? So this is why I like to scan the intraday chart. Maybe 15 minutes is too noisy for you, so please, by all means, go to the hourly chart, yeah, no problem at all. But scan the market for any potential bullish reversal candles at these important support levels. If we go right through, that's fine, that's to be expected, yeah? And that would simply continue the downside correction on the daily chart as suggested. Even if we go like a little bit further, no problem here. But the idea is that at some point we will bottom out and continue higher. Why do I think that we will bottom out and continue higher? Because the uptrend is in place until it's not. And the momentum still is fairly bullish. We're just coming out of this like little bit of a sideways range here. So the trend tools aren't that reliable. But that's, yeah. So, but overall within the channel, still the idea is for more bullishness. Even if we do something like this here, yeah, which seems a little bit unreasonable for now. 27.85, which would be, cool, yeah. So it's this trough here exactly. Yeah, so this would be like the last chance for the bulls to like pick it up and continue. Yeah, so at the most extreme, what I can see on the intraday chart, or like for the near-term bull trend to continue, is like something like this here, for example, that we bounced there, which would be on the daily chart this year, right? By the way, all of this is called multi-time frame analysis. So always be aware of what the lower level chart is giving us. They're giving us like earlier signals than the daily chart usually. And then of course putting it into the broader context of what's happening on the weekly chart. That is all for the TTF front month.